Welcome to Common Sense Investing. My name is Cameron, and today I continue my journey looking for the next 10x microcap stock. As always, I look forward to giving you introductions to good companies that also have the potential of being good stocks. Today I get to introduce and discuss some of the rewards and the risks of investing in Everyday People Financial. We're a team of everyday people helping everyday people. What does that mean? Well, if you want to become a shareholder or bullish on this stock, you really want to understand what this business does. This is the core of their business, EP Revenue Cycle Management, saying that everyone deserves a second chance to financially reestablish themselves. And unlike traditional models, we do not purchase debt, but instead focus on collecting third-party debt for a fee. So this is a debt collections agency. Companies pay them to collect money that is owed to them that is past due. I absolutely hate to say it, but considering the way the economy is going in some of the areas that they operate, Canada, the United Kingdom, and even the United States a little bit, there's probably a growing need for debt collection services. However, what differentiates Everyday People Financial from other debt collection services, other than collecting a fee instead of buying the debt, is they also offer other financial services as an add-on to their core business. So this is financial services for real everyday people, the Everyday Health Spending Account, the EP Borrow Down Payment Program to help people get first-time down payments for their houses, EP Supply Chain Solutions providing some capital for small business, the Everyday Wallet to help companies facilitate spending within their organization, and the EP Climb Savings Program to help people who now have a bad credit score because of collections reestablish that credit score. This slide gives us a lot of information, including saying that the clients that they serve are blue chip companies. They are serving these clients with various subsidiaries across the world right now, including in Scotland, England, and various locations in Canada. They plan on completing more acquisitions in 2025 and onward to add to these subsidiaries. All of these acquisitions are self-funding, and the company's equity portion has been completed at $1 per EPF share. For the 3 months ended September 30th, 2024, the projected annualized revenues are approximately $50 million. So I do think it's an interesting business model where the core of what you're doing is debt collections, revenue cycle management, and what you're doing is taking the clients that are providing you with these customers and the customers, and you were able to funnel those clients and customers into your other various higher margin financial offerings. I think it's brilliant. Now, before I get into the numbers, I'm not a financial advisor. I'm definitely not your financial advisor. These videos are not a solicitation to buy, sell, or hold a stock. This is just a video to create communication about a company that might have some potential in the future and I think is worth putting on your watch list for more research. Their Q4 and full year 2024 numbers will be coming up soon, but so far in the 9 months, their revenue has gone up. Their gross profit has gone up from $17.3 million to $30.8 million. That's an increase of 78%. Their profit or loss from operations has gone from a negative to a positive $3.3 million in 2024 so far. So a huge inflection point. Recent net profit this quarter of $977,000 and a little bit of share dilution, but nothing to be scared off by. The biggest red flag for me in their earnings is probably their balance sheet. They're down to about $671,000 of cash and cash equivalents. That's on top of some significant current liabilities that this company is going to have to manage. Now, despite walking this tightrope of declining cash and very low cash in the bank right now, one of the things that I will point out is they did have $5 million of cash from operations in the past 9 months. The reason their cash has been dropping has been paying off credit facilities. So they do have credit facilities to draw from. They are producing cash from operations. It might be possible to navigate 2025 without a financing. I'm not saying that's guaranteed. I'd like to hear more from the company on how they plan on managing this, but that's one thing to go research. Share price has gone up recently, and I think deservedly so. The headline numbers from their third quarter of 2024 were really good, right? Revenue up 89%. The main thing is this inflection point where they had a net income, earnings per share of 0.6 of a penny. So it's not a lot, but it's better than the net loss they have been having last year, with a profit margin of only 5.5%, but a profit margin hopefully growing. Valuation has been increasing except for EV over EBITDA because they have been producing more EBITDA. So yes, share price has gone up, starting to come down right now and consolidate a little bit. I can't wait to see where this goes in 2025. Quarterly chart, and you could see this inflection point, especially the past 3 quarters, right? This is EBITDA, operating income, net income, all in the positive, with the top line growing quite significantly, which is significant improvement from their previous lumpy and unpredictable quarters in 2022 and 2023. So improving, trending in the right direction. And insiders seem to believe so as well, with open market purchases at 64 and 65 cents Canadian. So yeah, that's pretty bullish, right? A lot of things to like with this company, but I'm a channel that doesn't promote or pump and dump stocks. Every company has risks. You just need to go and look deep enough. So what are some of the risks of Everyday People Financial? This information has already come out on various anonymous comment boards, so there's no way around not discussing it. The company has 2 CEOs, Barrett Reichtel and Graham Rankin. One of the board of directors is a Gordon Reichtel, who is the father of Barrett Reichtel, I believe. And Gordon Reichtel, previously in 2020, was charged and admitted to misleading disclosure by Cash Store Financial Services. This was a company that was operated by Gordon and Barrett. So the company shares traded on the Toronto and New York Stock Exchange until the spring of 2014, when the Cash Store applied for creditor protection. So in all fairness to the Reichtels, this was completed and done before 2014, so 10 plus years ago. But yes, it does put a bit of a stain on management here, and I hope they're able to move past it. I hope investors are able to move past it. I've often said, if you're going to invest in microcap stocks, if you're going to invest, especially in inflection point investing, where we're looking for a company that was previously not good and is significantly improving, and you're looking to make a lot of money with that transition, sometimes we have to look at the past, we have to learn from it, but we also need to forgive it, move on. Let the numbers be the predictor of future share price. So Everyday Financial People sitting here today at about 72 cents Canadian, not a lot of volume on the day. But in my opinion, this company is trending in good directions for both CANSLIM investors and value investors. This stock has some appeal. If you're interested in researching more great stocks like Everyday People Financial, go check out my website, www.commonsenseinvesting.ca. You've been watching Common Sense Investing. My name is Cameron, and as always, thank you for your time.